Hey, what's going on, you guys? My name is Carson Rouse, and welcome back to Business Buzz, where we focus on business, entrepreneurship, and investing. Sorry I haven't uploaded in almost a week now, but let's get straight into the best 3 stocks to buy in October of 2020. The stock market has been pretty volatile lately, and I mean that in the past month, and I also mean that in the past around 6 months. I mean, the stock market has just been absolutely crazy. In September, the month that we just went around, is actually the first month in a while where both the S&P 500 and the NASDAQ ended lower than at the beginning of the month. This was unfortunate. I lost a little bit of money in my portfolio, and I'm sure many of you guys did as well, but it's all right because I think October could be a bit of a bounce back month for us. But who knows? I mean, there's a lot of uncertainty in the market right now. There's the election going on, which I actually left a poll for you guys to answer. I had my own little Business Buzz mock election, and here are the results. And then, of course, there's also coronavirus. That's still a huge scare to the public. And then a potential stimulus package that's being talked about right now. It's in the works. So all of that is adding to the crazy market volatility lately, and it's also earnings season. So all of this put together has just concocted a crazy stock market. But I kind of just did a little market summary. Now I want to talk about specifically 3 different stocks that I think you should heavily consider buying. Now, of course, I am not a professional. This is just my own opinion, and you should form your own opinions on your own research. But before we get into it, make sure to go down and like this video for Business Buzz. Number 1, CVS Health. CVS Health is one of the largest pharmaceutical chains in America. You can compare them to the likes of Walgreens, Rite Aid, and the Drug Mart. Basically, everyone has a CVS near them, and they've been there at one time or another. That might be where you pick up your prescriptions. And it also works as kind of a little convenience store. I mean, I like going into CVS to get different snacks. You know, that's like a great movie stop when you're about to watch a movie. In the past few months, their revenue has increased 3%, and their EPS is actually rising. However, their stock is currently sitting at around $58 a share, and it's actually went down around 6% in the last year. Due to their revenue increases, though, and just overall solidity as a stock and as a company, I can see the stock correcting, though, to a higher price. I think they're setting too low right now for their true value. The stock even has a 9 PE ratio, which for their industry is decently low and shows that they are trading for a good value. They're also a great dividend stock. They currently pay out at around a 3.42% dividend. So even if their stock doesn't increase too much, that is good, consistent income for you guys to bank in on. Number 2, QUALCOMM. QUALCOMM is a very large and well-known company that deals with the design and manufacturing of different semiconductors. I actually made a whole video about QUALCOMM stock. You can check that out right here if you want to see a more comprehensive analysis, but if you want a more simplified version, just stick to this video. They also create different wireless products, and their main competitors include Huawei, Samsung, and Nokia. Their market cap is sitting at around $130 billion right now. You may not have realized how large of a company they really are, but QUALCOMM is a tech giant. In the past year, their earnings have increased over 8%, and their revenues continue to increase. One of their biggest reasons for their recent success is due to 5G becoming more of an adopted reality every single day. They are projected to be a major beneficiary in the 5G industry, and as the 5G industry gets bigger every day, it not only gets better for QUALCOMM. If things stay on the same track that they are, this could be a huge portion of QUALCOMM's business. Their stock is currently sitting at around $120 per share, and they're yet another dividend stock that pays out around 2.2%, which is pretty solid. They're also a profitable company, but when looking at their valuation metrics, it's obvious to see that they are a growth stock, and it's uncommon to see a growth stock that pays out a good dividend like that. So you're kind of getting the best of both worlds here. I still think this company is definitely a buy with their different mobile technologies and their growing dominance in the 5G industry. Number 3, CARMAX. CARMAX is a company which is known as the biggest seller of used cars in the USA. They have over 120 locations, and what they basically do is buy and sell used cars, making a profit in the middle. For example, if you have a used car that you want to sell and you want to get it out of your hands quickly and don't want to go through the hassle of advertising it and trying to sell it, then you can just sell it directly to CARMAX, and you're probably not going to get as much money for it, but what they do is make it convenient. They make a convenient sale, and then they go around and flip that car for a good profit. They currently have a market cap of just over $15 billion, so this is definitely the smallest company that I'll have talked about today, but that means it also has the highest room for growth, potentially. The reason I'm recommending them is because used cars are becoming more and more purchased by Americans every year. A big reason for this lately is because many of the big car manufacturers can't produce new cars right now. It got all backed up. So what many Americans are doing, because they can't buy these brand new cars, they're going and buying old cars, and where else to go than CarMax. Another reason CarMax looks good, at least for the short term, is because there's a lot of economic uncertainty right now. You know, who's going to be elected? What's going to happen with all this corona? When am I going to get my job back? All these questions that Americans are holding means that they won't be going out and getting these flashy brand new cars. They're going to stick to CarMax used cars to save a buck in times of uncertainty. Something really odd and peculiar about CarMax stock is that last quarter, they destroyed their odds, they beat their expectations, and the company just brought out some great news, great financials, but their stock still went down 13%. So why? I searched and searched for a potential answer, and the only one I could really find is that the market as a whole really didn't do too well, so CarMax just kind of got dragged down along with it. But all I see there is great value because this is a good company in a really good position that just brought out great financial news. So those are 3 reasons that you should consider buying the stock after their stock went down. The stock is currently trading at $93, and while, again, I don't like to just push analyst opinions, most analysts right now are rating this a very strong buy. But again, take that with a grain of salt and do your own research. Thank you guys so much for watching this video. I really hope that you enjoyed this and took something of value. If you took something of value, be sure to go down and subscribe to this channel. And let me know down in the comments below, are you going to be invested in one or multiple of these companies that I just talked about? Thank you guys so much, and I will see you in the next video.